Brian, I think you're currently on mute. I don't think we can hear you.
Hello, everyone. Yes, I was currently on mute. Thank you so much, Jim. So I just wanted to let everyone know that we are going to be getting started. We're going to give it another minute or two here. We are expecting a few more attendees to join us, so we're just going to give it a little bit, another minute or two to let those attendees go ahead and get logged in and connected to the audio. And just as a reminder, while we wait, we will be sitting in a hold and there will be no music played, but we'll be getting started in another 2 minutes or so. So thank you so much, and we'll be getting started shortly.
Brian, looks like you're trying to talk again. You're on mute again.
There we go. Thank you again, Jim. All right. Before we go ahead and begin, can everybody, Monica, Jim, can you let me know, are you seeing my presentation?
Yes.
Okay. I just wanted to make sure so everybody's seeing the presentation. So hello, everyone, and welcome. Thank you for joining us. We are going to go ahead and get started. And before we begin, I just want to take a moment and introduce myself. My name is Brian Scholes, and I am a national trainer here in the Customer Education Department at Freddie Mac. And I am not by myself on today's session. I have another colleague who's going to be co-facilitating today's session with me, and her name is Marlena Scott, and I will turn this over to Marlena in just a few seconds here. But I just want to welcome everybody to today's call as you have gathered with us to join us and learn a little bit more about our GreenCHOICE mortgage offerings. So with that, I am going to now introduce my colleague here, Marlena.
Thank you, Brian. Good afternoon, everyone, and good morning to some of you that are calling in from the West Coast. Thanks for joining us today. As Brian said, my name is Marlena Scott. I am the Affordable Lending Manager here at Freddie Mac. My role is to engage and create educational outreach opportunities with real estate professionals across the country. You are the trusted advisor. So we have a great session planned for you today. This is the first of 2 webinars we're hosting this week to introduce some of our newer product offerings under the Freddie Mac Duty to Serve initiative. So what is the Duty to Serve initiative? If you go to the next slide. This is Freddie Mac's comprehensive community mission, which focuses on affordable housing goals and contributions to National Affordable Housing Funds, and continues with our added efforts to stabilize communities, prevent foreclosures, responsibly expand credit and education. In addition to that, we also address some of the huge needs of the market. One of those is found on the next slide. Right now, 40% of the housing stock is age. So how do we help first-time home buyers or returning buyers address and overcome this obstacle? One of those can be found through our Freddie Mac GreenCHOICE mortgage product. This product focuses on energy efficiency enhancements, and I'm going to turn it back over to Brian, who's going to take you through all of the details on that today. Thanks, Brian.
All right, thank you so much, Marlena. So as Marlena mentioned, you can see with the current housing supply, over 40% of the housing supply is at least 50 years old. So with that, how is Freddie Mac helping your clients with looking at some of those older properties? Well, with Freddie Mac's Green Choice Mortgages, this is really our solution for energy efficient home improvements that help make financing those energy renovations easier. It's really part of our multi-year plan to facilitate energy saving improvements that can help families and your clients better sustain that home ownership. So with that, before we actually go ahead and begin, I just want to go over a couple of housekeeping items. And if you do not happen to have your participants or chat windows open, if you scroll to the top of the slide, you're going to see something along the lines of you're sharing Brian Schulz's PowerPoint or you're sharing Microsoft PowerPoint. And if you hover your cursor over that box, you're going to get a drop down. And then just to the right of center, you're going to see a participant icon and that chat window. And if you go ahead and open up those, that's going to be how we communicate throughout today's session. So for any questions that you might have on any of the content that we do cover, please feel free to utilize that text chat in asking any of those questions, and we will make sure that we circle back around and answer any questions that you might have. So once you have those opened, if you can, just go ahead and give me a quick response in that text chat, letting me know that you do have that chat window open. And please also make sure if you do have that chat window open, you are responding to all participants as well. All right, and I'm saying all hellos and hi's coming in, and hello to all of you as well. So it does look like we have located that chat box. So again, please, for any questions that you might have, please feel free to utilize that text chat in asking any of those questions. And to begin, I'm actually going to ask you a question. And the question that I have for you is that according to the U.S. Department of Energy, how much do you think the typical U.S. family spends on their energy bills each year? Utilizing that text chat, go ahead and type in whichever figure you think the average family spends on their utility bills each year. So what do you think? Give you a couple of seconds to go ahead and get that. It looks like I'm getting 1835, 1025. I got a few 2200s. So all right. So we got a little bit. It looks like the majority of us are saying 1835. And the correct answer to this question is actually $2,200. So according to the U.S. Department of Energy, the average family spends about $2,200 a year on energy bills. Now, of that $2,200, nearly half of those expenses are being used for heating and cooling. So homeowners may be paying for more for the utilities than they should be due to poor insulation, maybe insufficient lighting fixtures, any air leaks that might be due to some dated windows, and also some outdated heating and cooling systems. Now, by reducing these costs through energy efficiency upgrades, homeowners are going to be able to save money and be more comfortable in their homes. So how is Freddie Mac helping your clients with this? Well, let's begin by taking a look at two different potential clients. So with these two different clients, you have coming to you, client number one is really looking for a home in an established community. But with that home in that established community, they really are looking and they want a home that's a little bit older, has a little bit more charm to it. Now, client number two is really more focused on their total monthly payments, and they really are environmentally conscious, so they are looking to kind of save on those energy bills. So with Freddie Mac's Green Choice mortgage offering, how would you be able to be that confident, trusted advisor that these client needs when really kind of having that conversation with them about this energy efficient offering? So let's go ahead and take a look at that, beginning with how can Green Choice mortgages help these clients? Now, Freddie Mac believes that reducing home utility costs really places families in a better financial situation and really helps preserve affordability over time. Through our Green Choice mortgage offerings, we are committed to really facilitating and financing of those energy efficient home improvements and energy efficient homes, helping more families attain and maintain that home affordability. Finance energy improvements with any mortgage product, property type, and financing terms up to 30 years to really provide that greater affordability for borrowers and offer more flexibility. Now, these GreenCHOICE mortgages can also be paired with our Home Possible offering as well. And this is really a great option for clients who want to finance the cost of energy improvements, any clients hoping to increase the comfort of their home and increase the benefits of an energy efficient home, which may include those lower utility costs. Clients who want to qualify for greater purchasing power despite higher debt-to-income ratios and housing expense-to-income ratios. With the GreenCHOICE mortgages, borrowers or your clients are eligible with these GreenCHOICE and these energy-efficient offerings up to a debt-to-income ratio of 45%. And as I mentioned, these GreenCHOICE mortgages are eligible to be paired with our Home Possible offering, which is our affordable offering assisting those borrowers who have low to moderate income. And when you're thinking about borrowers who have low to moderate income, they really are looking to save as much money as they can when they look at kind of their utility costs and looking at that $2,200 a month average bill annually that those homeowners spend on those utility costs. This is a great way to where they can lower those costs. And with those Home Possible mortgages, they are eligible up to a 97% LTV and 105% total loan to value with those Home Possible mortgages. Now, when they are looking to qualify at that higher total loan to value, it's important to remember that that is always going to be with a qualifying affordable second on those Home Possible offerings. Now, the first thing you want to have is when you are having that conversation with your clients, the first thing that's always important to remember is having that conversation as to which properties are eligible for the GreenCHOICE mortgage offering. And the GreenCHOICE mortgage offering is going to be available on any 1 to 4 unit property. And that also includes any manufactured homes. So if you do tend to see manufactured homes within the areas that you provide your service, it's important to remember that those are going to be an eligible property type as well, provided that any of the improvements related to our GreenCHOICE mortgage offering do not impact the structural integrity of that property. Now, when you're thinking as to what are some of the eligible items that can be included in the GreenCHOICE mortgage offering, it's going to be some of the ones that we have available that you can see on this slide would be any type of programmable thermostats, any caulking or weather stripping that might need to be replaced and that will also help increase the efficiency of that home, adding any ceiling, wall, or floor insulation, any type of air sealing that might need to be done on the property, air condition and heating replacements to high efficiency air conditioners or furnaces. Any type of solar water heaters would be ineligible, as well as low flow water fixtures. Any high efficiency refrigerators, freezers, water heaters, and light bulbs. And any replacements of windows and doors. Now, you are not limited to just these basic energy or water efficiency improvements. For example, in just a few moments, we will be talking about like solar panels in the event that your client is looking to maybe add some solar panels. That's an eligible option as well. And we'll get into the requirements of those in just a few moments. Now, let's circle back around a little bit and check in on client number 1. So your first client has found a home that they really love, but they are kind of a little bit reluctant to purchase due to that efficiency of the home. And in the conversation that they have with you, they really start having that conversation and talking to you about looking at replacing some of those windows and doors throughout the property to really make it more efficient. So with that, when you're thinking about that and you're having that conversation with the clients, as you saw on the previous slide, this is an eligible upgrade that your clients can make to that property and utilize that in our GreenCHOICE mortgage offering. But how would you go about determining the value for that loan to value, total loan to value, or high total loan to value. So when you're thinking about our Green Choice mortgages and when your clients are looking to kind of upgrade that property to more energy efficient items, for any purchase transaction, the value is determined by the lesser of the as completed appraised value of that mortgage premises, or the total acquisition cost, which includes the price paid for that mortgage premises, plus the cost of energy and or water efficiency improvements. So let's take a look at an example here on what would be the value for that property. So your first client has found a property that they love, and the purchase price for that property is $200,000. In that conversation with you where they were talking about looking at replacing those door and windows to a more energy efficient windows and doors, and they kind of looked at it and they determined the cost of those replacements of those doors and windows was going to be $20,000. The as completed appraised value, once the appraiser went and kind of looked at that property and did their assessment, the as completed appraised value for that property was $225,000. So what would be the value given to this property? Thinking back to that previous slide, utilizing that text chat, what would you say is the value of this subject property? Go ahead and let us know. So the purchase price is $200,000. The cost to replace all of the doors and windows was $20,000. And the as-is completed appraised value price was $225,000. So circling back to this slide, when you see the value for those purchase transactions is determined by the lesser of the as completed appraised value of that mortgage premises or the total acquisition costs, what would be the value given in this example? Any thoughts? Again, if you are providing those responses in text chat, please make sure you are sending them to all participants. All right, so I'm seeing a couple coming in, and we're a little bit split here. So some of us are saying 225, some of us are saying 220, and in this instance, the value would be $220,000. Remember, as you're looking at determining the value for that loan to value, total loan to value, or high total loan to value in this instance, it's always going to be based off of the lesser of the as is completed appraised value price or the cost of that property plus the improvement. So it's always going to be the lesser of those two. So in this instance, we're looking at a value of $220. $220,000, I apologize. And yes, sorry, yes, I meant when you are responding, if you can respond to all panelists, that would be great. Yes, I believe I did say participants, but yes, all panelists. Thank you so much. All right, so when we're thinking what the proceeds from a purchase or no cash out refinance transaction that might be used to finance those energy and or water efficiency improvements that are completed after the note date, are subject to the following requirements. And remember that these are for any purchase or any no cash out refinance mortgages are eligible as well. So with that, the maximum amount of the proceeds that may be used for the purchase and installation of energy and or water efficiency improvements is limited to 15% of the as completed value of that mortgage premises. So remember, as we kind of looked at the value, determining the value to base that loan to value on was the lesser of the two. When you're looking at the amounts of the proceeds that may be used for the purchase and installation of those energy and water efficiency improvements, it's limited to 15% of that as completed value of that mortgage premises. So looking back and circling back to that previous slide, you would base it off the $225,000 as completed value when determining that 15% that is eligible. The proceeds sufficient to cover the cost of the improvements must always be deposited into a completion escrow account on the note date. And then an interior and exterior inspection appraisal with an as completed value of that subject property subject to the energy and or water efficiency improvements being completed must always be obtained by your lender and retained in that mortgage file when documenting these eligibility requirements. After completion of the improvements, the appraiser must always inspect the property again to verify that the improvements have been completed, and a completion report, which must include photographs of the completed items, must always be obtained and retained in that mortgage file. And then all energy and or water efficiency improvements must be completed within 180 days of that note date. In addition to that, an energy report is going to be required and need to be obtained and retained in that mortgage file as well. But that energy report is only going to be required if the energy and water efficiency improvements exceed $6,500. If it is less, if the energy and water efficiency improvements are less than $6,500, then there's not going to be a need for them to obtain that energy report. So with that, let me just pause here and do a quick check-in to see if anybody has any questions so far over any of the content that we have covered. So if you can, just go ahead and let us know in that text chat. And if you do have a question, please feel free to use that text chat and let us know. So there was a question that came in as to who pays for that second appraisal and when. So when you're looking at meeting these and that completion, the appraiser that must go back and inspect that, that's going to be a cost that is rolled into the loan with that. So you would just always have to have that conversation with whichever lenders that you are working with for that conversation into regards to the cost of that inspection for that appraiser to go back and confirm that those improvements have been made. Absolutely, thank you. All right, and I am seeing no additional questions coming in, so I'm going to continue on. Thank you so much. All right, so now when we're kind of thinking about those energy improvements, and the one thing to keep in mind, and one of the takeaways that I do want you to have from today's session, is remember that these energy reports are only going to be required if those energy and water efficiency improvements exceed $6,500. If those energy and water efficiency improvements are less than $6,500, then there is not going to be any need to obtain an energy report. There is a cost associated with these energy reports, but they are market specific. So again, you would always just to have that conversation with your lenders that you're working with based off of any of these eligible energy reports to determine what the cost of these are. Generally, they are between anywhere from $300 to $500 when looking at completing these reports. So a home energy rating system, so any eligible energy report would be a home energy rating system or a HERS report completed by a certified residential energy service network or home energy rater, a Department of Energy home energy score report completed by a home energy score certified assessor, or any comparable rating report or audit completed by a certified home energy rater or consultant indicating the property is a high-performing energy efficient property. So there was a question that came in, are you saying 5,500 or 6,500? So in regards to the energy reports, an energy report is only going to be required when the energy efficiency improvements exceed $6,500. If it's less than $6,500, so if it's $6,498, then in that instance, an energy report would not be required. It's only when those energy efficiency improvements exceed $6,500 that an energy report would be required, and any of the eligible energy reports you see listed on this slide are eligible. So what are the requirements of these energy reports? So an energy report must identify the recommended energy improvements and expected costs of the completed improvements. It must specify the actual or expected monthly or annual energy savings. It must verify that the recommended energy improvements are cost effective. And it must be dated no earlier than 120 days prior to the note date. Now with that, let's circle back around and check in on client number 2. So client number 2 has found a home that they love, but they are again concerned about the monthly payment. Additionally, the home has some older utilities. So in that conversation that you have with client 2, being that trusted advisor, client 2 kind of has talked to you a little bit that they're thinking about adding some solar panels to the home to increase the energy efficiency of that home. So as we kind of talked about a little bit earlier on in today's session, those solar panels are an eligible energy efficient item that can be included. And with that, when you're thinking about those solar panels, another thing to keep in mind is that an energy report might not be required if the borrower is, or if your clients are all adding solar panels to that property. An energy report is not required if the cost effectiveness may be demonstrated by obtaining the invoice for the cost of their solar panels and comparing the cost of those panels to the income produced over the life of the panels. When that has been completed, then the income produced exceeds the net cost, and the cost effectiveness has been demonstrated, and there would be no need to obtain an energy report in that instance when your clients are looking to add solar panels to that property. Now, when the income produced exceeds that net cost, keep in mind that that does include any tax, credits, and rebates associated with those solar panels. So remember earlier on when we did talk about the fact that 40% of the current housing supply is at least 50 years old, and the challenges associated with those properties such as older water heaters, older heating and cooling systems, older draft windows. Remember that GreenCHOICE mortgages can help lower those payments for your clients looking at those older homes and wanting to update those utilities to more energy efficient items for your clients. Any of your clients who are looking for a move-in ready home with energy efficient items and who want to lower their costs. In addition, GreenCHOICE mortgages can be paired with other offerings, as I mentioned, such as our Home Possible offering as well. So keep that in mind when you are having that conversation with your clients and you're looking to be that trusted advisor that your clients are looking for when you're looking at any of those cost efficiency items as it relates to energy efficiency, especially in the event of looking at these solar panels, keeping in mind that energy report would not be required in the event that the income produced exceed the cost effectiveness of those solar panels has been demonstrated. All right. So with that, I do want to just open this up for any more questions that you might have before I do turn this back over to Marlena to kind of close us out here. So I'm seeing a couple of questions come in. Let me just go ahead and circle back around, take a look at those. So do the improvements have to be completed prior to the closing on the home? So no, the improvements do not have to be completed prior to closing. Any improvements that are completed after the note date are eligible, and that's what we were taking a look at back on a couple slides ago. Let me circle back here just a moment so we can take a look at that. So here, this is where we were taking a look at the requirements. So these would be for any purchase transactions where the energy efficiency improvements are completed after the note date. These would be the requirements that they would have to meet. So this would be where the appraiser would have to go back in, re-inspect that property, confirm that those energy efficiency items have been completed. Got a question here on solar panels. The solar panels may take a year to realize the income versus invoice. And that's where when we're looking at the solar panels, when we're kind of thinking about the solar panels and whether or not that energy report has been completed, you would just have to kind of, again, take a look at that and determine the cost effectiveness of those solar panels and comparing the cost of the panels to the income produced over the life of those panels when determining whether or not that energy report would be required or not. And if the cost effectiveness is demonstrated, then an energy report would not be required. Do the contractors have to be approved contractors through Freddie Mac? So do the contractors have to be approved contractors through Freddie Mac? You know what? I am actually going to table that question for right now, and I will circle back around to that in just a few moments. But I will get you the answer to that. I'm not 100% sure off the top of my head, but I will make sure I get that answer for you. And what is the deadline for reporting the efficiency? So when we were looking at that, it would have to be within 180 days. All right. And with that, I do think that does answer all of the questions that did come in. So Marlena, I am actually going to turn this back over to you.
Awesome. Thank you, Brian. Lots of great questions out there. And just to let you guys know, you all will be receiving a copy of today's presentation. Brian, I actually am not seeing the slide. But we're going to go ahead and wrap it up with just some of the nuggets that we can take away today. So GreenCHOICE Mortgage. This is great for the finance cost of energy efficiency improvements. This can be paired, as Brian mentioned, with Home Possible and assist with clients with low to moderate income. I do apologize, Brian, are you able to click through that? Thank you. So sorry about that.
Can you see the slides now, Marlena?
Yeah, I can see it's perfect. Thank you.
All right, great. Thank you.
All right, so the next one is the GreenCHOICE Mortgage helps enjoy the benefits of energy efficient homes, which can help lower utility costs. I jumped a little bit ahead, but this can also be paired with our Home Possible mortgage, which helps low to moderate income clients. So basically the takeaway here is that you are the trusted advisor. We want to make sure that you have information about all of the latest product offerings. With this is our first session. On Thursday, we're going to go ahead and introduce our Choice Renovation Mortgage. I hope that you tune into that and make sure you register. So that will be at the same time at 12 p.m. Eastern Time. And you can actually click the link below on the presentation you'll get later and register yourself through that. So we'll go to the next slide just to touch on some resources that you can take away as well. So Credit Smart, I'm really excited to introduce this. Through our Credit Smart curriculum, we actually just came out with Homebuyer U. This is for first-time homebuyers, and this fulfills the actual first-time homebuyer education requirement with our products, Home Possible and Home One. I've actually taken this, and I think it's wonderful. It's really interactive. There's a lot of great material. There's knowledge checks just to really help you, the home buyer, be engaged, and also it's free. So this is a great tool for you to utilize with your first-time home buyers. Next slide, please. GreenCHOICE Mortgages, you've heard all about it today. So we actually have a web page here that you can go to get more information in regards to what Brian spoke about today. Next slide. In addition to that, we want to make sure that you have all the resources you need in regards to staying in contact with your home buyers. Communication is really key, especially in your day-to-day engagement. So we've created a lot of different resources to help engage with your buyers more. We have a step-by-step mortgage guide that you can actually help with your first-time home buyers. It can all be found on this resource page, which is to help engage home buyers. And that link, all of the links, by the way, are going to be found in the chat. Next slide, please. So we want to talk about product offerings to help engage first-time homebuyers and the returning homebuyers. We also know that there are opportunities when it comes to down payment. So we actually have partnered with Down Payment Resource to come up with a down payment assistant website. This website, you'll be able to find all the programs that are available to your buyer, and you can actually utilize this in your day-to-day by just simply bumping your listings up, your addresses, to see what programs are available for some of the properties that you actually have. This is a great tool to help address those down payment needs. Next slide. And to stay informed with all the latest and greatest information, we actually created a real estate professional resource center here at Freddie Mac. This resource will actually provide you with all of the updates regarding any industry news or trends. When we go back to being live, hopefully soon, will know about all of the information regarding any events that are taking place in your local market. So make sure you register for that so you can stay up to date with all the latest information that Freddie Mac has for real estate professionals. I think we have one more slide. And our final slide is one of my favorite resources. This is the My Home website by Freddie Mac. This is for consumers only, but this is really a great tool to use in your day-to-day with your home buyers, especially when you're having that first initial consultative appointment. It just is a walkthrough for them to understand whether renting or home buying is actually a good fit for them. This includes also the step-by-step mortgage guide, but it's really important for your home buyers to understand what they're getting into when they're going to purchasing a home, and also will help you with them knowing what to expect during the home buying process. So feel free to visit the My Home website. That link is also in the chat as well. And that brings us to the conclusion of our session for today. Thank you so much for tuning in, and we hope to see you on Thursday. Thanks, Brian.
Thank you so much. Have a great day, everyone.